So basically I'm recording. So if you guys want to watch the video again, if you want to look over anything, you can feel free to just access the video, and that's it. Let me just lock my door. All right. So let's go into the market today. Let's see what happened. Let's take a look at what I was looking at. Let me just minimize this. And this was just a failed, this was like a potential long. I didn't actually enter it, but this was just the market that I was looking at today. Okay. So I want to start off talking about the treasury, the 10-year, the 2-year, the 30-year, what that means, what that is, and why that's important. So the bond yields are very, very important to understand our economy. And the reason for that is because if you have a maturing bond, for example, the 2-year, with a 2.7%, we're nearing 3%, which is a very, very important number. And that shows you how much yield you're going to get on the bond. So if you buy the bond, let's say for $10 and it yields 2%, that means that after 2 years, the bond would give you a yield of 2%. So you would make 2% of your money. So you'd be getting $2, right? 2% of 10 is 2. So if the yield were to increase, let's say to 3, then you'd be making 3. Now, why is this relevant? Because if the interest rates are going up, then the bond yield would be going up as well. And the reason for that is because if the bond price, just the price you're purchasing the bond, goes down, then the yield would go up. And this inverse relationship between the bond price and the interest rate / also inflation, because inflation also has an impact on this, is really important to understand in regards to our financial, our economy's financial health, and just a gauge to understand if we're heading towards a recession. At this point in time, there's a very strong demand for the dollar, which is currently at 103 on the dollar index, which is, I was expecting potentially, let me go on the 1 week here. I was expecting potentially for this level to break. Oh, I'm sorry. I'm talking about this one here. This level to break. This is the potential level that I would like to see get reached. But yeah, I was expecting that, this was a initial move up, a level of supply, demand, supply, which came to mitigate that. This was the new supply zone, which mitigated this supply. And then this zone, I expected right here, I expected that to hold. So in reality, the market just ran up through it, completely invalidated the supply, showing us that now demand is very much in control of this market, and there is a very high demand for the dollar. Fundamentally speaking as well, our interest rates are going up on the dollar. They were the Federal Reserve rate hiked the currency to 50 basis points, I believe, which is giving an incentive to store foreign currency in dollars, essentially. For example, China, other countries, Japan is the largest reserve currency holder in the world, other than the United States, of the US dollar. The Japanese economy, or the Bank of Japan rather, is buying a lot of treasuries and bonds from the US economy. It's very, very significant. I think it's $1.4 trillion holding, something like that. It's a huge amount of money. So yeah, and especially the fact that, we're seeing a very significant shortage in oil, and oil is mostly bought in dollars. I mean, now, there's a little bit of a revolution in the world with Russia, and the ruble is becoming very strong against the dollar. And well, in general, the ruble is getting strong because of the fact that, one, it's being backed by gold, and two, because Russia is only selling their oil in ruble, which is causing the demand for ruble to increase. That's why we're seeing a strength in the currency. Just see here. Okay. And I want to keep it. Okay, I guess I can't do it like just me. I don't know how to use the Zoom so much. In any case, so yeah, that's why we're seeing higher prices on the ruble. Actually, I might as well show you guys that. We're already talking about it. Ruble USD on the, let's go on the 4-hour. Yeah, so Ruble USD, it really, you can see the sell-off here. I mean, it was never so high to begin with, and then just, completely collapsed. And when I say collapse, I'm talking about less than a penny. And it just, out of nowhere just made a very sharp recovery, moving up significantly higher. And again, that's just based off the reasons that I gave you. And it's just not really stopping, price point wise, I think this thing could just continue moving up. This is completely manipulated. And I want to show you guys something else as well. Gold is very important to understand what's going on with gold, because if you understand the fundamental aspect of gold, which is, the fact that Russia is a huge holder of gold. I think it's probably the third or second largest gold holder. And the first, I believe, is the Federal Reserve, holding, I think, 500 billion or some absurd amount of gold in the Federal Reserve. And for a while, the Federal Reserve backed the US dollar by gold's intrinsic value. That's why gold has been historically in an uptrend for basically all of time. 1971, Nixon signed the deal. It's called the removal of the gold standard. The dollar was backed on the creditworthiness of the US economy. Basically, the banknotes that were issued, aka dollar bills, were backed by the US government and not by gold. The Russian ruble is not backed by the Russian government. It's backed by the intrinsic value of gold. So now, in an effort to hurt Russia, this market is being manipulated. We were seeing a higher pricing than gold. Gold tried again. It failed to rally above this price. To my opinion, I think gold is being manipulated. I think that there's a very high demand for gold, and it's just being suppressed by large institutions such as the Federal Reserve, which are driving down prices of gold, which is really good for me because I would love to be a buyer of gold. Maybe on the weekly time frame, I could show you. This is all fundamental speculation. I'm not actually going into trade. This is all just fundamental, understanding the larger forces that are going on in the market, not necessarily how to day trade 101. This is more of a, understanding the market itself, which is, I think, very important, to understand what's going on and how we can apply that to our day trading. Because, using fundamental, I caught that gold short the other day. Yesterday, I alerted that I was selling gold. I made, what was it, like 6R, I believe, on that trade. I'm not sure exactly how much it was. I could check in the group, but I made 6 risk reward on that. That was a beautiful trade that I caught, knowing that gold would go down because of the manipulation. So realistically, this demand caused higher prices. Using smart money, it would make sense that the market would want to come here. We have an imbalance on the 1 week time frame. Very big levels here. This is like 1800. I would love to be a buyer of gold at this level. That's just insane, right? We have that double top, creating that very easy, obvious liquidity. I would love to just buy that and just hold gold for forever. 1800 is a very crucial level to get in on, and that's a fundamental play. We're not gonna get into that right now, but yeah, expectations on gold continue drop, very, very bearish. I might not even be looking to buy. I really want to see a confirmation of entries on the 1 week time frame on this demand. So we're gonna have to wait and see on that. And until then, gold is a sell. There is no buying on gold, only selling. And if there's a buy, it's just a sell. Like it's a retracement to then sell from. Like gold is just on its way down. Speaking of gold, let's actually take a look at today's trade on the 15-minute. What happened? Actually, I think I'll go on the one for that. So yeah, I alerted this. Well, I didn't alert it. I actually did a chart analysis post on it. So let me break down, why I was looking to sell this market. Wait, let me see who's in this chat. Svaz and Quinton. Guys, if you have any questions, you can type it in the group, or you can just unmute yourself and ask me, okay? Because I'm, again, here to help you guys and anyone else watching. So yeah, let's just go into the analysis and why I decided to take this sell. So the market I saw was coming up to actually, let me go on the 15-minute. Excuse me on that. Let's go right there. Okay. So on the 15 minutes, I saw that gold was making a higher high, but obviously, I know that we're very bearish. I'm not looking to buy this market, rather I'm looking to sell it. So we basically reached above old highs here and here. This is previous day's high at the New York session. We rated that high, New York's high from yesterday's session. We also reached this level of supply right there. Let me identify that. I actually missed that, but I can draw it out. can show you what I'm talking about. So we came into this level there on the 15-minute time frame. We rejected off of it. We moved up again, and really the key giveaway of price's intent was the fact that we made a swing high. This is called a fractal high. Okay, this candle right here would be the fractal. So 1, 2, 3, 4, 5. Fifth candle's high is lower. This is a strong high now, meaning that there is now an interest to bring prices lower. So once I saw this, let's go on the 1 minute back again. So once I saw that fractal occur, so that high would be represented with on this wick right there. And then the movement down, we broke structure, we broke through demand, and we were starting to move up, and we came into this supply zone. So I was actually expecting it to reach into this imbalance on the 1 minute, but but gold doesn't really care about imbalances. It's more of supply and demand. So it did respect this hidden supply zone. Another thing that I want you guys to know, by the way, whoever's watching, this took me a little bit of a long time to realize, or I guess know, but if you see something like this, let me highlight that for you. If you see something that looks like this, where the candle's body is then mixed in with that candle's wick and then a continued downtrend, like what we're seeing right here, that would be a hidden supply zone, because in the smaller time frame, like this 5-second, 15-second, you would see a move up and then a move down. So this is a hidden smaller time frame demands supply zone. I'm sorry. It would be a supply zone. So the market comes in to mitigate that supply zone, and from that point we would execute our short position. I was targeting just this overall. I mean, that was just like I just wanted to see my risk reward, but realistically, I was targeting something like this. Just to see that demand zone, which is right here, which was unmitigated. We didn't reach it yet. Now I know we saw a clear intent to move down. We saw it mitigate that 50%, then it just moved up. So we had a very weak low because it failed to create a new high. So yeah, you would have entered that. That is a very simple concept. I hope that makes sense to you guys. Oh, hi Ian, how's it going? Yeah, I hope that makes sense to you guys. Seeing that weak low established, just based on the fact that we see that supply is very much in control. So that low is just a very obvious level of liquidity that would want to be taken by the market. It's also known as inducement. Inducement meaning that people think that this is a strong low, they start buying, but really it's a weak low that will be targeted later. That's the inducement theory. Obviously the supply zone got ran, and then it even moved significantly lower. It actually came to mitigate, well, I guess fill in that fair value gap right here that we saw, that liquidity void, whatever you want to call it, all the same thing. So once it cleared out the liquidity void, it's kind of moving up a little bit. Yeah, obviously I wouldn't be trading this market here at this point. It's just, I don't trade Asian session, especially on gold. It moves pretty disgusting. But yeah, I would just want to see next day's price action when I come in. I start trading at 8 a.m. Eastern Standard Time. So I would want to see how the day develops, if we're making any new highs, new lows, see who's in control, supply or demand. Right now, some demand is technically in control. We liquidated these people down here, and now we're just moving up. I would need to see this demand zone get broken. I just move on based off of demand and supply zones being violated, and based on those violations, I would take a trade in the direction of the violation. So at this point here, supply is technically in control right now, I guess, because we made a new low and we failed to make a new high. So it would be an obvious place to sell from, I guess. And then I would probably take profits, assuming I would be selling this thing. I'm not going to, but let's say I was selling, I would be looking for something like this. Just, again, not that I'm telling you to take this trade, it's just to understand the concept of supply to demand. So this is the level of demand. Even really here, this is also a demand level that I would want to see get respected. Obviously, I'm not trading this. This is just a concept, the conceptualized I guess theory that I'm trading, like my strategy. It would be just from supply to demand zone. Very quick scalping. I'm not holding any trades for a very long period of time. You never know what's going to happen. And when people say, oh, I know it's because this has to happen, it has to be this way, the market doesn't have to do anything. You just got to take what you can and get out. You know, as soon as you don't feel comfortable, you gotta get out. What's this? This, bro. Yeah, thank you. Good evening to you as well. It's good to have you again. But yeah, that's just on gold. That was today. This was a crazy trade I took on gold the other day. Um, again, let me just break down the concept. I know I'm just showing you guys gold, but this was a trade that I took on. This was yesterday's trade. Yeah. Obviously, I just showed that it would have ran to a 18-1, but no, obviously we caught a 6-1. I think that was somewhere here. We caught like a 6.6, something like it was something, yeah, it was something like this. Let me just how do I refresh the why is it not working? Oh, I understand. Reset chart. Okay. Yeah, sometimes it like kind of acts weird, you know. 1 second here. Okay, so this was the actual trade I took. Obviously, if you had held it, you would have made a lot more, but let's just take a look at, what I was looking at. So we saw supply, this is on the higher time frame, 15-minute supply, move down, right? Failure to make a new high, move down. Failure to make a new high, move down. So before this move down, I mean, obviously that's the move that we caught, but we moved down, right? So we're now putting in new lows, right? This is a bearish market. We move up again, failure to make a new high, but look at that 1, 2, 3, 4, 5 fractal moving up again into that supply zone. Just one last time, just giving you a chance to get in. Boom, entry 1 minute, collapse of price. That's 6-1 right there. Stops just above that supply zone, just to be safe. You never know what's gonna happen, and move. Just wow, very quick. I wish that I trusted my analysis even more. I imagine I caught that entire move in its whole entirety, right? Imagine, one can only, I realistically, I probably would have gone out around somewhere like here. I mean, still a 10-1 in a day is beautiful. And this was a real trade that was taken. Where's my alert section? Where was it? Right here. Well, I didn't alert it, but it was on the live stream. All you had to do was enter the live stream and you would have caught this move. Real stuff, real trade. That was called out. Well, I guess not called out, but that was taken live. That, I really believe that you guys should enter the lives and be part of that. Oh, this was a backtesting situation. So I don't know what you guys think. Would you guys be interested to see me backtest? Maybe not in this session. I mean, I could and just show you guys how what my thought process is. Maybe that could help you, realistically. But let me just try to find where I was left off at. Oh, it's somewhere around here. So a 15-minute. Okay. So we're on the 4-hour. Well, I guess I can do this at a later time. I guess I won't show you guys my back testing right now. I'll just stick with gold and other markets. Let's take a look at Euro USD. I really enjoy Euro USD. Recently, I don't enjoy Euro USD because EU just, I mean, yeah, you could have caught this, from supply. We broke above several structural points here. We made a new high. This is a change of character. We broke above the high. So now we moved back into that, moved down, broke above. We came to a level of interest here, especially the fact that it just failed to make new lows. That could have been an entry. You could have caught that entry, right? Very simple strategy, very simple logic. But I mean, look at this. Look at this move down. It just moves like, I don't know. It just looks like this equal lows are going to get ran here at this point. Yeah, I don't know. I mean, it's just moving really disgustingly. I don't really like EU recently. I like gold. Oil too has been moving nicely. I mean, very obviously bullish. And I know what you might be thinking. You might be thinking, how is this bullish? We're moving down. And here's the thing that you guys got to understand. Excuse me. Nothing about this is bearish. I mean, take a look at this. Yeah, it looks like we're coming down, but look, higher high, higher low. We failed to make a higher high. Now we're moving down a little bit. But I mean, again, I'm not really concerned that this is going to move down because there is a huge, what's the word? Shortage of oil right now. Oil is in a very big demand. I mean, even now, like, look at this. Look how quickly oil moves up and look how slowly and gradually it moves down. Yeah, we may be bearish for now, but I mean, I'm expecting a big rally coming up. I mean, oil shortages are not going to stop. I mean, especially recently. This is bullish. I mean, yeah, we failed to make a higher high here, I guess, but I'm not too concerned. I think that we might sweep this low, maybe come back down a bit, but definitely in the long term, I'm talking about long term, not in today's market, tomorrow's market. I'm very bullish on oil, even though right now it's bearish. Again, I see that it's bearish, but I'm talking about in the long-term perspective. Oil is very, very bullish. Even this now here, it's not going to be forever. We're very bullish, fundamentally speaking. We're just recovering from the move up. That's all. That's all it is. It just moved up too quick. So it's recovering a little bit in this consolidation phase, but the trend is going to go up. I mean, if you don't see that, then I don't know what to tell you. No. Oh, look at that. We topped 3% on the 30-year. That means that the bond market is very cheap right now to get in because they're high yields because nobody's buying bonds right now, which means that there's a very big lack of confidence in the US economy. There's fears of stagflation. There's some crazy food shortages too. I mean, if you really look at the news and really understand what's going on in the world economy, not just the US, a lot of people, I mean, think about it. The Federal Reserve just sold, I think, like 40 billion worth of bond assets. I think that was yesterday, or I think that was yesterday, actually, I saw the news. That's a very big sell-off. And the reason that we're seeing higher prices on the bonds is because they're trying to attract more investors. So they lower the prices of the bonds and they increase the yield to get more people buying, but nobody's buying bonds right now. The lack of confidence is just being shown to you right now. It's really something else. I want to take a look also at UJ. Wow, so we're at a very strong 130. Okay. So why do I want to take a look at UJ? So I'll explain. The Japanese yen is in a very, very tough situation. The Bank of Japan they're doing something called yield control, okay? Which means that they want to control the yield curve of their bonds in an effort to control the interest rate. Because again, we know that interest rates and yields are directly related. If you have high yields, you're going to have lower interest rates. If you're going to have higher interest rates, you're going to have impacted yields, and these things go hand in hand. And we're really going to see that now. And especially the fact that, let me show you guys something really interesting. Actually, how do we do the compare? I think it's plus, right? Oh, there it is. Oh, 30 years. Oh, did I just, okay. Oh, that looks terrible. Wow, wait, wait. That looks terrible. I'm sorry. Let me just change that. Let me try to do that again. There is a reason why I'm showing you guys this. Just give me 1 second. 30-year, maybe 10 year. I don't want a futures. I want a bond. Why can't I compare the bond? There it is. There we go. So why am I showing you this, right? Very simply, look at how the bond market is going up in addition to the US dollar Japanese yen. So, okay, so we see that there's some sort of correlation. And what is the correlation? US dollar Japanese yen means that the US dollar is gaining value over the yen. And right now, the exchange between $1 to yen is 130. That's how a currency quote works, right? So Japan is the largest holder other than the US of US Treasury, which is, by the way, debt. Bonds are debt. So they're a holder of US debt. So if the yen is going down, then that means that yields are going to go up, because right now nobody's holding the debt. People are selling off debt. The Japanese economy, the Bank of Japan, rather, is not able to sustain this amount of debt. They're not able to hold it. So as they're selling it off, the yields are going up, because when people sell bonds, the yields is going to go up. So that's why we're seeing a correlation between these two. Okay. And again, the Japanese yen is going down because of the fact they're doing yield control over their own bonds. And the fact that they're doing that shows you, or you should understand, that they're controlling the interest rate by controlling the yield. So when institutions in Japan are selling the bonds, the Bank of Japan is forced to buy back those bonds at a negative interest to their currency, which means that they need to print more money in order to buy more bonds, so that the yield will be the same at 0% interest rate. They control the yield to keep the interest rate at 0%. So they have a bond yielding 0%. So people holding the bonds in Japan, they sell them off because they don't want to hold bonds that yield 0%. So as the people are selling off the bonds, the Bank of Japan needs to buy those bonds back no matter what. They need to keep it at an equilibrium. And that really impacts the currency. That's why we saw a huge spike last week, because of the fact that the Japanese yen is being used to buy these negative, shitty bonds. This is happening. That's the reason for this move up. Okay, so right now the yen is very, very weak, and that's why there's the correlation between the bonds, the bond market, as well as the yen. I don't know if that made sense. It's a little confusing. Sometimes even to me it's a little confusing, but these things are all correlated. You know, that I can tell you right now. It is very important to understand yield curve, especially to understand how that impacts our economy in the US, as well as other major economies like the Japanese one, the Canadian. You know, they're all connected, every single one. Japan just happens to be the largest holder of US debt. So that's why if Japan, the yen would go down, that means they have less money to buy treasuries, which means that the bond market would be going up. And you know, that's just the reason that we're seeing the increase in the bonds yield, as well as the fact that they're selling them off the Federal Reserve. They're taking them off the balance sheet. They're doing quantitative tightening. They're reducing the amount of treasuries they're buying, aka bonds. So if the treasury purchases are going down, which is what they're doing, then the bond market is going to go up. And that just shows you that, you know, nobody's buying these bonds right now, which is a bad sign for the US. I hope that made sense to you guys. But yeah, let's just focus. That's just a little bit of fundamental talk. Let's take a look at tomorrow. What am I looking for tomorrow on tomorrow's market? So let's see. So today we made a pretty significant move down. But again, I'm not a long-term believer that we're just gonna continue moving. I know that I said that, but I want to see some kind of retracement to sell from. You know what I mean? I want to see maybe some kind of retracement back to the supply zone. I don't think we're just gonna drop down. You know, I kind of want to see a retracement into this supply right here, because we have that equal high. You know what I mean? If you don't understand, then just ask me. But here we have that equal high right there. The failure to make a new high. I want to see the liquidity get ran, that supply zone get mitigated, and then from that point, I would like to see a sell, grabbing these weak lows, this weak demand, this weak demand, unmitigated, this weak demand, and just make new lows. So that's kind of what I would be looking for. So in tomorrow's trading session, it would be safe to assume that we might already see that move up, grabbing that liquidity, and then continuing lower. So assuming that we would get something like that, like this, I would want to enter based on that retracement and then take price lower. So, and I would just, oh, I don't know what happened there, but let me fix that. There we go. So I would just want to be, you know, taking it, playing it safe, really looking for just supply to demand. So really this kind of move realistically, that's what I would be looking for. And again, it doesn't have to happen. I'm not trading this session, the Asian session or London. I'm not trading it. I would just want to see what's going to happen. I want to see what the market is going to tell me. This is all speculation. This is just what I would expect to see. It's not necessarily what will happen because no one knows what's going to happen. You just got to adapt yourself to what is happening. Keyword, what's happening, not what will happen. What's happening? What am I seeing? What is the market telling me? I'll tell you right now, whoever's watching this in the YouTube video, in the recap, if you're just watching this in the future, a really big thing for me that changed my profitability was what's happening now, not what I think. I used to plan out my trades, limit order, and just watch it happen, and it would stall me out because I didn't adjust to what's happening. So very important to make that distinction. I know it seems kind of obvious or kind of redundant to say, but you'd be surprised how many people make that same mistake. So again, yeah, that's what I'll be looking for on gold. Just again, lower pricing. We made that very obvious bearish order flow. We're very very bearish on this right now. I mean, I'm talking about on the 4-hour, on the long term. Yeah, I know we had a very big price swing, but that's just to reaccumulate net short positions. I'm not expecting this thing to continue rallying. And if it does, then we have to see, what if this thing moves up higher? What if this thing wants to come in and breach areas that are unmitigated, like here, areas that haven't been tapped, this imbalance here on the 15-minute, all very likely places that price could eventually reach, kind of stabilizing itself before collapsing. Smart money wants to take out all these short sellers from the market before selling off even lower. That could happen. You can't discount the idea. At that point, I would probably want to see like a break above here and then, a retest, basically enter off that retest and then take prices higher. So really just break and retest, kind of looking for obvious places that the market would want to bounce off from. So, old support and resistance / supply and demand zones that the market left clues for us to use, stuff like that. But yeah, realistically speaking, I'm pretty short on gold right now. I'm not bullish. Even though we had this monster of a move, right? Let's just take a look at that. That was like, what is that? Once from 160, 1850 to 1878. That's $27. That's pretty massive. It's a big price swing. $27 on gold is huge. Absolutely monster. But even though we had that move, it's not enough. I mean, it's still a lower high. This market is still very bearish. So gold, I love gold. I really do. I'm very bearish on it. GJ is a very fun pair. I do enjoy GJ. Today was very, very frustrating on GJ though. I'm gonna show you guys that in 5 minutes. Oh, that's right. That's why I wanted to show you guys. So actually, let's go on the 1 minute actually on that. So the idea was this supply would hold and then we would basically sell off from it. So I was selling right here based on the fact that we came into the supply, we moved down, we came into this fair value gap, the very small 1 minute fair value gap, and we rejected off of it. So I sold, we were in profit right here. It moved up, I was still holding it. It came, stopped me out, just sweep the liquidity above that supply, and then move down to my take profit, which was the old demand. Obviously, let's say I had entered the trade correctly, this would have been a 5-to-1, but if it wasn't, it would have been a 3-to-1. That's fine with me. 3-to-1, 5-to-1, those, you're still making money, which is awesome. But yeah, next time enter off of the demand, off of the supply, and have higher stops. That's what I learned from it. But yeah, GJ, it performed well. It just made a situation where I couldn't have avoided that loss. It would have swept my order and then continued down. But yeah, I mean, this was a pretty obvious move. I want to say that I called it correctly. I just didn't enter well enough. I didn't take a correct entry, but I did call that the move would continue down based on the fact that we're very bearish. We broke structure. We were just retracing back to the move that caused it all, which was here. We had equal highs, very obvious levels of liquidity, this unmitigated supply. It was a perfect zone with this little sweep. I couldn't have anticipated for that. I guess I just sort of entered, and put a wider stop loss. That's all I can tell you. Just plan better for the next time. I hope that made sense to you guys. The strategy, how I look for trades, just using order flow, supply and demand, and just understanding, those concepts. Yeah, I hope you guys enjoyed the class. It was a pretty, I talk a lot about fundamental stuff, but I think that I made my strategy a little bit obvious slash understandable to you guys. If you guys have any questions, please ask me. I would love to help you guys out. Perhaps next class that I do, it could be a back testing session, just watching, you guys watch me just rinse and repeat over and over again and really explain my strategy to you and how I'm able to catch these moves. I know this one I failed, but in general, I've been catching some pretty crazy moves on the market, and it's just using the supply and demand stuff. It's really, really simple. Just takes a lot of practice, that's all. Oh, awesome. I'm happy you enjoyed it, Quentin. It's really cool, man. I hope that you enjoyed it as much as I did. I loved helping you guys out. Yeah, if you want to see more, just let me know, and I'll be sure to post more content and trades and recaps and stuff like that. I like explaining to you guys why I'm taking these trades and stuff like that. It's very useful information, I think, to really understand. Hey, how is this guy doing it? What's his strategy? What's his logic? Oh, so the supply zone, it didn't get, even though it moved up above, it failed to make a significant higher high. And, that's causing for lower prices because of the fact that we didn't break above. That means that lower prices are going to happen. And that's it, and it's just failures and holding. So look, it failed to make higher prices, you sell. That's it. It moved, it confirmed that it's moving down. Even this RSI made a lower low or lower high, even though price made a higher high. That's divergence. That's a sell, and you sell. It's very straightforward. Just using confluence and using the strategy. But yeah, that's basically it for today. That's really all I really wanted to talk to you guys about. Fundamental, understanding the logic of the market in terms of how news and economics affect pricing, and using the strategy. And yeah, that's it. I want to do another class maybe on Thursday at the same time. If you guys are interested, let me know and I'll do another one. And yeah, see you guys in the next class, and hopefully you guys join in tomorrow at 8 a.m. Every single day, 8 a.m. live trading session. Hope to see you guys there. And thank you guys for coming. Good night.